the $1 Million Mortgage Experience Podcast.
All right, welcome to the podcast. Today, Josh Sternberg is with us. He started the Sternberg Law Group in 2009. He's helped thousands of families avoid foreclosure and achieve financial freedom. He aggressively advocates for his clients, protecting them from the big banks and predatory lending practices. So welcome to the show.
Thank you, my man. Great to see you.
Yeah, you too.
Yeah.
We've known each other for a while. Back in, I think 2010, maybe we met, like during the housing crisis when I was doing some foreclosure work, and you had a law practice and you started doing that. And so, yeah, great to see you again. It's been a while.
Yeah. If when I think about what you were doing back then, I think what you were doing, were you charging people a very small fee, right?
Very small. It was like $9.95.
Mm-hmm.
And
I was gonna say $1,000.
You could pay it like over 3 months, or like I think it was 12. Like we even did like recurring billing.
Yeah.
Like,
so you're
$50 a month or something crazy.
You were basically charging people $1,000 for the peace of mind to know that they didn't have to do anything. And I was charging them closer to $5,000 for almost the same exact thing. So your business model.
I was the TJ Maxx and you were the North.
Exactly. But really back then, when you're in that foreclosure crisis, right? The mortgage meltdown.
Right.
Options were very limited.
Well, people didn't know. I mean, I think it's like when you think of how, like things get lost after like it hasn't happened in 30, 40, 50, 60, 70 years.
Right.
And then just the knowledge of it is like, wait, what do you do? Like, what do you do when foreclosure starts? I mean, does the sheriff come knock on my door, right away? Like this, nobody knows. I mean, I remember I was in the mortgage business for like 11 years and then the crisis happened and I had no clue. And I'm like, If I have no clue being in the mortgage business for 11 years, how much less of a clue is the average, fireman or teacher gonna, you know what I mean? Like they're not gonna know what to expect if they miss a payment. They're looking at down the blinds, like is someone gonna come take my keys or in my house, and are my neighbors? It's embarrassing, right? My neighbors all gonna know that this happened, and yeah, it was a crazy time.
Well, it's well said because so much of life has to do with timing, right? So if you were doing mortgage loans from 2000. When did you start doing
97.
You started in 97. Okay. So from 97 to let's say 2008, let's say 98 to 2008, 10 years where basically the arrow was the chart was just up, right? Rates kept getting lower and lower. House values kept going up and up. Market was going up and up. And then there was the crash.
Right.
And then kids, who I think they call millennials, I'm still confused exactly where that line is.
I still call anyone that's like younger than me a millennial.
Anyone who annoys me, I call them a millennial.
They're millennial.
It's a good scapegoat. But these millennials, like when rates started going up, right? So think about if they were just getting into sort of like the business world when they were, let's say they did go to college, 21, 22 years old.
Yep.
And if let's say that was in 2012, from 2012 to 22, till rates started going up, started sneaking up, they lived in a decade, their entire business life, their entire adult life, all they saw was green, right? The arrow was going up. You could close your eyes and pick any tech stock, let's say.
Yep.
You could close your eyes and buy essentially any piece of real estate. And all you would see is that it would go up. You could buy something in 2012 and sold it in 15, bought something new in 15 and sold it in 18, bought something new and sold it in 21. And you could have made a couple $1 million doing nothing else but paying an interest-only loan at 2.5% interest.
Totally.
Right? So I think, to your point that people didn't know what they were doing, I think you're seeing a little bit of that now, right? Because
a lot of people that 08 for them was like they were 8 years old.
Exactly.
You know what I mean? Or they were 12 maybe. They did fuzzy, like mom and dad kind of had a we can get as many toys at Christmas, but it's not like a vivid memory. Maybe they moved, they didn't know. The parents aren't going to tell like, oh, we're going through foreclosure, son. Sorry,
right?
Kids
or they
always
moved. Yep, good point.
And so these kids now that are in their late 20s or whatever, they don't know. They have no clue.
Yeah, they know no better than we did back then.
But they do have access to TikTok and YouTube.
Yes.
And so they can just quickly find out.
That's true. Information.
Information. I remember when it was like 07, probably November. I was sitting at home because we'd lost our office space. We had to give it back. and I had no employees anymore except for one. And that was my processor. And I was like trying to figure out what to do. And I remember Googling like walk away from your mortgage, and every single ad was stop foreclosure, stop foreclosure, stop foreclosure. And then it was like, you keep going down. And then the only thing that was, it was like Kelly Clarkson walk away song, you know? And then like, but then there was like one video from CNBC guy, the Mad Money guy, was Jim Cramer. Yeah. And he just said, if your house is underwater, walk away from it like a bad stock.
Right.
And he's like, keep your car because you need to get to work. But he's like, go bail on your house and go rent. And he's like, no big deal. Come back around, start again. And I remember when I saw it, I was like, holy shit. Like, no one is saying that in Google. Like, there's not even one business that's talking about that.
Yeah.
And I was like thinking, if someone were to say that and you had a real estate license, you might be in trouble. You could lose your real estate license. I was like, I don't know if I can say it. So I called my partner now, but back then he wasn't my partner. He was just a friend that was a lawyer. And I was like, dude, can we say this like as a real estate? And he was like, let me look into it. And then we just kind of formulated the business.
Yeah.
But there wasn't a lot of information about foreclosure back on YouTube back then, because there was YouTube, but it wasn't like, there was no information like financial information like that.
YouTube hadn't become the sort of the do it yourself, learn it yourself model yet, right? Back then. Right.
It was more like probably dancing and, you know, kids doing pranks and
exactly. Old clips, entertainment and stuff like that.
Right.
Were you guys national? Or was it only California?
We started out like thinking it's just California because we had to do all this research on California law.
Yeah.
And then we quickly, when we got on international news, ABC Nightline, we had influx of calls from everywhere. So we were like,
that's awesome.
God, we got to so my whole job was like calling attorneys and trying to get, you know, this whole network done and finding CPAs that they could discuss and bankruptcy attorneys in different states.
Right.
But I think that's, you know, you saw us on some news thing and then called or something and we connected.
That was 60 Minutes.
Yeah, that was in 2010. So
I was late.
You were late.
Yeah.
Yeah. And we'd already been doing it. You know, we went already through a cycle of like boom and then kind of a little drop. It was funny because it was all of a sudden, I think it was right after the election. So the election back then was what, 2008?
2008. Yeah.
So 08 was
Obama,
cranking, right? Yeah. And so
first.
November 08 is when it all of a sudden sort of fell off a cliff.
Oh, right.
For us, like the call stopped coming in. And I'm like, guys, what's going on?
The mortgage calls.
No, this was November 8th, the foreclosure calls stopped coming.
Stop coming, okay.
And I'm like, we all of a sudden saw a real drastic drop off of people like worried about foreclosure. And I was like, what's going on? And so I got into the sales center and I'm like, what's going on, guys? What's happening on the phones? And they're like, I keep hearing Obama's going to pay my mortgage. And I was like, wait, what?
Yep.
And so like, there must have been some message that went out that like the Obama administration is going to come in and stop all the foreclosures and make it okay. Yep. And so I was like, that's weird. So like 09 was kind of a weird, we had to like downsize our office. And then 2010, when they probably realized Obama's not going to pay my mortgage, boom, it just took off again. And so 2010, we had a massive boom again. And through like 11, and then it kind of waned down after that. But it was like a 4 or 5 year run from like 2008 to 12.
About 12. Yeah, I'd say, I was going to say 7 to 12 if you want to give it 5 years.
Yeah.
Because 12 is, I think, when the market really bottomed out, right? So if you're a real estate investor, if you bought any property back then, if you go back and look what the prices were, what homes in Southern California were trading for in 2012 was the real bottom of the market.
Yeah.
And it just didn't go any lower than that. And then it slowly started building back up. 13, 14, 15, 16, 17, until we got back into sort of this like another boom cycle.
Right.
You know, so I was also, when I started doing what I was doing, which is essentially doing anything I can legally to keep people in their homes, people who did not want to get foreclosed on. This is where I put my money. This is where we put our down payment. You know, I took money out of my 401k. I got inherited this money. Like, this is my nest egg. This is what you told us to do, right? I was listening to, you ever listen to the All In podcast?
Love it. Yeah.
I'm like addicted to it.
I
I got
love
into
it,
it a couple months ago, and now I can't miss it.
It's so good.
It's so good. And they were saying, you're fed the American dream,
Yep.
which is to buy a house.
Yep.
So the government is forced to protect that asset, because they were talking more today than back then, right?
Right.
So when they kept rates low, and where they give kind of these backstops to banks, making sure the mortgage meltdown doesn't happen again,
Right.
it's because everybody put their money into their homes. That's what they've been told to do.
Right.
But back then, a lot of people didn't want to let go. So I was busy from started in 2009. I thought I'd do it for 6 months, maybe 12 months, right? Real easy. I was a young kid.
It was like a booming kind of.
Yeah, my buddy
thing,
said I was just transitioning. I had my law degree, but I wasn't practicing law, right? The economy hit me too. I was in a media business before, where we were distributing, selling advertisement in magazines, so print ads. And when the market crashed, all our mom and pop business evaporated. And it was a local magazine, so it was about 80% mom and pop. And then the 20% of the corporate business, they also said, hey, just sort of like now you hear, we're going to wait and see.
Yeah.
So that the advertising, the advertising revenue fell off a cliff. And I said, okay, I got my law degree. And my buddy said, everybody's getting foreclosed on. There's these new thing called loan modifications.
Mm-hmm.
And I thought I would do it, like I said, for 12 months. And now I'm close to 14, 15 years later. And I still feel every once in a while like this thing's going to last another 3 months, then I'm done with this. But
it's over, yeah.
the market, COVID hit. I should actually, I should needle you a little bit on this. You probably don't remember this. COVID hit, and you and I spoke on the phone. Okay, I don't expect you to remember it.
No, I remember there was a lot of calls I had to make, and I talked to so many people when it hit. Yeah,
and I can't remember why we spoke. Maybe you just checked in with me, or I checked in with you. Like, how are you feeling about this? And I couldn't see you, but if I could see you, I promise you were as white as a ghost. Okay,
it was a scary time.
You were scared, and I didn't have the answer. You being scared me. How about that? I was like, oh, because I had some, I had my own personal stuff going on. We had just moved into a home. I had some investments out. I was like, ooh, this market's going to really tighten up. And I remember I was even negotiating a purchase of my own, that we were doing an investment on a piece of real estate. Numbers might be off a little bit, but we were in escrow for, let's say, $1 million. We called, we said, we'll buy it for 800. They said, we'll take 900. Okay, done. It was like that type of crazy stuff. Like in a 10-second phone call, you save $100,000 and then you buy the place. But isn't it crazy how COVID created so much opportunity in the mortgage business, the lending business, the real estate business, like overall, right?
Yeah.
Everybody refinanced, right?
Yeah.
Everybody bought.
Right.
And the people who didn't refinance or didn't buy are the ones that are still out there in the market, keeping it sort of saturated, right? Even with these higher rates.
Yeah, because everyone that bought, they don't want to refi because they have 2.5%, 3%.
Yeah.
Like, I was scared though, because they turned the light switch off of non-QM. So we only did non-QM. We weren't set up to do any other kind of loans. We weren't set up to do government loans, HECMs, or Fannie, Freddie, none of that. And so my whole source that would buy loans from us, like all the Wall Street guys that buy our loans, they just said, we're not buying anymore.
That's it.
And we had luckily we had just closed on a trade of like 35 million that we sold like a week before.
Sold out.
30. Yeah. We still had 20 million sitting on our lines,
right.
our bank lines, but 30 million we got rid of. And then when that happened, so if we didn't get rid of the 30 million at the peak of before it went down, we probably wouldn't be here today as far as, we've been out of business, but so many of our competitors went out of business, but we luckily had good banking partners that like let us sort of sit on it and work with us.
No doubt it was scary times, but but would you say for you personally, the scariness was like days, weeks, or months?
I mean, it was, so we couldn't lend from probably March 15th, 20th till like June 1st. Yeah. So there was a good 2.5, 3 months. Yeah. Where we were like, we're doing nothing. We're just sitting here, just twiddling our thumbs, trying to get rid of these old $20 million in loans. And no one's wanting to buy. We keep hearing like someone might buy, someone, and you're just like,
you just get in line for the PPP loans.
It was kind of like the we got the PPP,
the government dole.
Yeah. And it was like, it felt a little bit like when no one was in the office in late 2007, when all the lenders went out of business, late 2007, and I was like trying to figure out what to do. And it felt a little bit like that. The difference that really saved my like hope was that I knew there was historic equity, and I knew that there was like true lending, like ability to repay. So everyone that got a loan has ability to repay. I remember most everyone had decent interest rates. They were locked in. A lot of them were 30-year fixed loans. A lot of people got 30-year fixed. There was very few ARMs that were been given. So I was like, first thing I did is I started calling all my real estate contacts, agents all around, like probably late March. I spent days doing this, like, I don't know, 30 different real estate agents in different markets and asking them, hey, are you seeing any more listings pop up? Because what I was worried about was all the listings were going to just pop on the market, and then there was going to be this massive crash. But because it was COVID and no one wanted anyone in their house, everyone kind of sat tight, and they didn't list their house. They didn't freak out. And I think there was a lot of mods being given out right then. Like you could go to Wells Fargo and click a button, and you could 3 months, no payments.
They call them forbearances. Now those are called forbearances.
Right. So it was a forbearance. Just put it on the back of and it was just like nothing happened. So then I was like, I took a breath, and I was like, okay, there's not going to be a crash, and I knew all the equity was there, so I wasn't like worried about it. Yeah. But I was worried about just being able to function as FundLoans, and like. We were like, what can we do? Like we had to like we were going to invent some other product or something like that, but there was just nothing. No one wanted to do it. All the funds were like waiting, sitting on the sidelines with their money, and they didn't want to put it out. It's scary. What were you thinking of during that time? Were you getting a bunch of calls from people, or?
So we had a little bit of a lull too because of the forbearance thing, right? So if people are not at risk getting foreclosed on, they're not going to call a foreclosure attorney, right? And they're not going to go run out and file bankruptcy. One cool tidbit, which probably the layperson isn't aware of, is that when Congress passed the CARES Act, is what they called it, I believe. That was the CARES Act. You have to fact check it, but I think it's CARES Act was the COVID Act that gave out like the $2 trillion, the PPP, all that stuff was in there. There was a small section in there for bankruptcy. Okay. If you were in a bankruptcy, Chapter 13, which is a standard 5-year payment plan, if you could show evidence of COVID hardship, which just meant you were out of work for 3 months, like all of us basically were, you could extend your bankruptcy from 5 years to 7 years. So what does that do? It gives you an extra 2 years to pay everything back. It just lowers your payment at that time. Okay. So we were contacting or being contacted by a lot of our existing bankruptcy clients filing those motions. So that kept the lights on for a little bit. And then you'll know this better than I do, but all the non-QM guys, the sort of the private money, we call them, or some of the banks that are not Fannie or Freddie, they weren't always giving out forbearances. No. Right. So we were only getting called by people who had those type of loans or people who are already in existing bankruptcies. But that was a time, this is not novel knowledge, but it is good to have some level of diversity in whatever business you're in, right? I'm sure you guys have multiple products. If I was just doing bankruptcy, like my buddies who were bankruptcy attorneys, very slow. Very slow. But because I also did the mortgage assistance, if our bankruptcy slow down, we can then lean into the mortgage business. So that kept us going. We were okay. Well, not the boom like we saw in 2008, 2009, but going back to like what you were saying is because in 2008, that crisis, that was systematic. Yeah. Right.
75 years in the making.
75 years in the making. Bad loans, bad paper, bad knowledge, but
such bad loans, man.
Such bad loans, right?
Such bad loans,
but when the bankers start lending better loans, when you guys start doing, better underwriting and stuff like that, right? People have some savings, they have some leeway, they got a second property they can liquidate to continue paying on this first property and things like that. Which is why today, even COVID into inflation, you don't see that same I was going to call it a pop, but yeah, I guess a pop, right? Like the bubble popping. But what I mean by that is you don't see the market crashing.
Yeah.
Right. You see there's hiccups, there's issues. People are always, I don't know if you guys deal with commercial, but people are always talking about commercials
getting hit
next.
hard. Yeah.
But the difference with commercial, in my opinion, is, I don't want to be derogatory, but sort of the bankers are smarter, right? The bankers look at it. Okay, that's $100 million asset that we have a $65 million loan on.
Right.
Sure, it was a 5-year loan at 3%. 5 years is ending this month. We're going to have to turn it to 7%, which is going to make them default because their interest payments are going to go up by at least double.
Right.
So you know what we'll do? We'll just go, instead of going to 7, we'll go to 4, or we'll go to 4.5. You know what I mean? There's more of that.
So ratchet it up slower.
Make a little bit more money, but what are they going to do with those assets if the market gets flooded by all those assets? They don't want to foreclose, right? They don't want to own those things.
Yeah, I don't know. I know they're talking about it on the All In. They were talking about that, yeah. And I have several deals I'm in commercial, like multifamily, with friends of mine. They're all in that business. They're like, hey, John, put in some money into this deal. And I'm like, okay, cool. I'm making, it's 21 and things were great. So it's like, sure, I'll put in, a little cash into this deal, a little cash into that deal. Now they're all like, some of them are doing, capital calls and because they can't get the financing that they needed, the adjustments. And so
multifamily is a little bit different. So when I say commercial, I'm talking more like office buildings, medical buildings, like bigger, retail things. But yeah, there's some pain in those multifamilies, right? Especially in California because nobody's paying their rent.
Yeah, I mean, I don't know those statistics because I don't follow that, but I would hope people would know that they could get evicted at some point. So you think that some people are going to be paying rent. A lot of the deals I'm in are like one's in Memphis, one's in other parts of the country.
Yeah. So what's the issue there? That the rates went up or the rents went down? Because those are the two big things. The rates jumped.
Yeah, and I feel like rental
adjustable rate.
They're adjustable rate mortgages. When they bought the place,
I gotcha.
It was an adjustable. They did add value. Yeah. So now they can't get out of that loan and get into the loan they wanted to then adjust the cap rates and then give everyone their money back.
So give this to me. I'm going to ask you a question now. Give me your 60-second snippet on why do people still do adjustable rate mortgages? Like, you know what I'm saying?
No, I'm still a believer in adjustable rate mortgages.
Sell it. Tell me why.
Yeah. Well,
if you may be, but tell me why I would get an adjustable rate mortgage. If you want, keep it in the residential, whatever you want to do.
Yeah,
tell me why.
I think a residential, and a lot of our loans now are 30 or 40-year fixed. And they'll have a 10-year interest only option, but then goes to, so if you have a 30-year with a 10-year, then you go to a 20-year AM after the 10-year interest only is over, right?
On the same rate or adjustable?
On the same rate.
So the rate never moves.
Yeah. So a lot of these products that we do in non-QM, 40 years even better because then it goes to a 30-year AM after you get your 10-year interest. So it's
gorgeous.
That's if you're a non-QM guy and you got that rate and you got that product, you're set. Like you don't need to do anything with it, right?
So if I bought a house in 21 when the rate was 2.75, and I did a 10-year IO
with a 40-year term.
With 40-year term, after that 120th payment, my 2.75 stays.
Yep.
It just converts into a P&I,
30-year fixed.
And then you pay it off for those 30 years.
Yep.
You guys are doing a lot of those?
We did a lot of those.
That's a beautiful
product. We still
product.
are doing it. Yeah. But the rates are 7.5%, 8%.
Yeah.
But now the argument for adjustable rate mortgages is predicated upon your average homeowner refinances every 5 years or less. Historically, they refinance within 2 to 5 years.
Yeah.
That's the window. Or they sell, move up, change, whatever, right?
Right.
So the idea for doing an interest-only ARM is that you get to use that money instead of paying down a principal. You get to use that money today versus later when you either refi or you sell it. So you're getting like a lower payment. Also that's the same argument for should I impound my taxes and insurance or should I pay them separately? Same argument. I can use that money today.
Right.
So it's more risky in a sense because you're, what if you're putting that into an investment, right? Or you're putting that into something, putting it to work for you where instead you're just giving it to someone else to hold on to pay your escrows or to pay your your taxes or your insurance, right?
Right.
So you're not making any money off that money, but maybe that's, depending on how big it is, it could be meaningful. So if you're going to refinance, sell, or if you know this isn't your forever home and you know you're not going to keep it and then turn it into a rental, then an IO 5-year ARM, 7-year ARM. 7-year ARMs are better, obviously, because, you know, it gives you a little more buffer if you know within 5 years the average.
Yeah.
The other thing is, you know, if you're buying a home, like I think today, in today's market, hindsight, it would have been the smartest move to probably do, and I think a lot of people did it, got 30-year fixed, or they got this product with a 40-year, with the 10-year. I think most people did that in these loans. I think that there was a lot of like First Republic loans that were made with 10-year IOs or 7-year IOs. A lot of the more community banks did the ARM loans versus 30-year fixed, because they don't sell it off to Fannie, they don't sell it off to hedge funds. They keep and they portfolio it. So that you'll see like a lot of those guys that are, you know, First Republic guys that did these low rate 5-year ARMs, right? So, I mean, if you have the option to do a 30-year with a 10-year IO, then that's way better.
Right.
Rate's not that much different, because the differential on the 5 versus the 10 versus the, you know, all those factor in that, you know, the rate was almost the same. It was within like an eighth. So it was, usually you could get a 5-1 ARM way lower than a 30-year fixed when the curve is inverted differently, you know, if it's not inverted. And so I think ARMs were more important and more beneficial throughout history when they were much lower than a 30-year fixed. Now it's like, why not you just get a 30-year fixed? But sometimes you can't, you know, like if you're a, you know, business owner and you went to First Republic or one of these guys, they didn't probably even offer that, but you're like, well, you know, I'm going to probably do something with it in the next 4 or 5 years anyway. So I'll take the 5-1 ARM, the 7-1 ARM.
Yeah.
So a lot of people play that
place
game.
for it.
I've always done ARMs on my houses, you know?
Yeah.
And now, like, you know, I luckily I did them in like 22 or late 21. And so I've got 7s. So they're probably not coming due till 29, you know, they're going to be a shift. So, you know, you get some time, but it's always in the back of your head. Like, is that going to be a problem?
Yeah.
You know, in that time.
Because I can tell you, and that's a great answer, by the way. So thank you for answering that question. We're in San Diego. I drove down from Los Angeles towards the top of the market, right? So 21, 22-ish, right?
Right.
Prices had gotten so high in Los Angeles that I think people were no longer getting 30 years fixed because they needed that sort of teaser mortgage payment for the numbers to make sense, right? So, I mean, LA is an expensive market, so I'll give you an expensive example. If you want to live in LA proper and you got 2 or 3 kids and you want to be in a good school district and stuff like that, you're in the you're high 2s, low 3s. So for ease of conversation, let's just say you're looking for a $3 million home.
Right. That
$3 million home was all of a sudden trading for like almost $4 million because rates were so low and the market was so hot. So people were jumping into that stretching for that $4 million home and saying, okay, I'll take a 2.5% IO because the payment's less than I'm paying now.
Right.
So I love that payment. But now, like you said, in the back of their head, there's a bit of a conundrum, which is,
what am I going to do?
Well, what's it going to look like?
Yeah.
There's nothing you can do, right?
Yeah.
There's nothing you can
sell,
do. You can't, you can sell, right?
So you're like,
try to explain that to your wife and kids after you've been there for 18 months, right?
Right.
But
you got time, right? Like hopefully you've got time.
Yeah. You hope that the Fed brings rates down
in the next 4 years.
Exactly. With an eye on when they started bringing them up, and this is when things are going to adjust, and we don't want to put people out on the street and that sort of thing. You know, and they get them back down to, I don't know, you would know better than me, but I always think somewhere in like between 4 and 5% kind of makes sense for both sides of the coin,
Yeah, people
right?
can afford a 5. Like if they have a 3 now and it's IO, you know, if they keep the principal the same and they go to a 5 and it's 4 years later, hopefully they're making a little more money, inflation adjusted.
It's just jumping in IO again, right?
Jumping it back in an IO, you know, and just keep going
just
like
wave
that.
Yeah, then you just ride the appreciation wave.
Yeah, and that's what's happened in America, right?
Yeah.
That's why, you know, I used to love sitting down with, you know, it would be at a birthday party, like a kid's birthday party, and the grandfather was always there, and I'd sit down with them and be like, so where do you live? And they'd tell me, I live in Point Loma, and I go, man, I bet you your house is appreciated over the time. He's like, oh, I remember they always tell me the story.
Yeah.
I bought it for $40,000, back in 1976. And now it's worth $2.5 million. I'm like, so I always think about that. I'm like, okay, it's never going to stop. It might have these little down, notches down, but if you look at anything, like people always will say, I remember people would tell me they'd get an ice cream cone for like 5 cents. And I was like, that's crazy, right? When I was a kid. and I now I'm telling the story, I would get thrifty ice cream at 25, 35 cents.
Oh my God, you're right.
And
you're
now
right.
it's like $4 or $5, whatever it is, right?
Yeah,
so it's what, I mean, it's clearly our dollar depreciation.
Right.
I mean, our dollar, because it's fiat currency and because they just can print it whenever they want, the whole rich dad, poor dad thing, right?
Yeah.
That guy, I'm hoping to have him on my podcast at some point, but
he'd be a good guest. Yeah.
He's big believer in like, you got to have hard assets because if they can just print it whenever they want, then there's no value in it.
Right. And the assets appreciate and the dollar becomes worth less and less.
So what's that going to do to your average middle-class American that their income isn't really kind of going with the same rate as inflation?
Yeah.
So they're getting poorer where the asset holders are getting richer. And what is that going to do, like, 10, 20 years from now to our whole country, which if things don't shift, right? Like we're on this trajectory for some really crazy times in America. Unless things change.
I agree with you though. I'm a believer in that. So we're here to have fun, right? So I just thought it right. You said fiat, so you made me think of like that whole crypto craze and all that sort of stuff. What's the worst? And I'll tell you mine too. Do you have a worse stock that you purchased during this most recent stock run up that you saw crash? You got any of those in your portfolio?
Like that has done well. Like I think.
No, I'm saying that has done poorly. Done poorly.
I try not to look at it because it's like. Yeah, I mean,
that's my father-in-law's strategy, by the way. When the stock market's up, he checks it incessantly.
All the time,
the iPad literally sits on his lap. I went to visit him in Florida recently. I was like, "How's it going?" He's like, "Oh, I don't check.
I don't check.
It's
depressing.
I don't look. Yeah, he won't look." I'm like, "You don't look."
I bought so many different weird like things that I thought were gonna do. So I'm a big believer in like I'm a CEO. I'm a visionary, right?
Mm-hmm.
I'm a forward thinker. I try we came out with our second mortgage product a year ago, which was early. Like we were super early. Everyone was scratching their heads. I don't want to do a second. But now everyone wants to do seconds.
Oh, second deed of trust.
Yeah, second deed of trust.
Gotcha.
And so like I think of these things and sometimes I'm too early to stuff, but like I bought a bunch of stock in 3D printing because I'm like, this is gonna freaking change the world, right?
Yep.
Nothing ever happened with it. No one cares. They're 3D printing houses now. You can go and like you want to have a mock-up of a mug or something, a new design or an axe. You just 3D print it.
Yeah, they did a cool cul-de-sac or like a community out in the desert or something with a golf
course.
No probably
too. It'll happen.
That's a good story.
There'll probably be robots at some point to build stuff with 3D printers and is like it'll disrupt at some point, but it's too early, right? So like that, I think when COVID hit, I bought some corn. When I heard like that, there's going to be like food shortages and stuff. Nice. I bought like corn stock.
That's good.
Which I don't even know what that's done. I think it's probably fine, but commodities are always just
right.
What about you?
You got to ride the wave. Yeah, I'm trying. Well, financially, my worst was I bought Coinbase the day it IPO'd. So, and I mean, that is just.
I think I bought a little bit of that too.
I remember it was the morning. It was like. So what the market opened 6 or 6:30? I forget out here. I think 6:30.
Probably 6:30.
6:30 the market opened out here.
Yeah, probably
6 or 6:30 markets opens. It's 5:30 in the morning. I'm already on the Peloton because I'm juiced up. I'm like, Coinbase is coming out today. Yeah. My wife is like, "What are you doing? The lights are out." Coinbase. I'm riding the Peloton. Here we go. Like
ding,
it was
ding,
like at 50, 100. They didn't open it to the public. I think until it was like people were saying it was going to be. I think 250, which would have had it valued at more than the New York Stock Exchange was valued at that day. Coinbase, right?
Wow.
And I was like, there's no stopping me. I'm buying it. I had my order in. Wherever it hits, I'm coming in.
Yeah.
So I remember I bought in at $370. And I haven't checked like my father, but I think it's trading for like 40 or 50 bucks right now. You know what I'm saying? Like it's so you're in trouble when the guy who handles your stocks, right? He calls you and he goes, you might want to do some tax harvesting this year.
Yeah.
I go, well, what's tax harvesting? Well, you can just sell your losses and then you can
buy back.
Well, you can buy them back next year, but this year you take the loss, so you can write it off as a loss on your tax returns to save you a few bucks on the. That's not a good sign. You know, that's not the call that you want to get.
At least I get to get some money back, but no, it's not good.
I still said no.
Yeah, the whole Bitcoin, Ethereum, XRP, all these different things.
Yeah,
I'm super into it.
Me too.
Like, I think it's something to always be watching and like to know that there is something there, and who knows what's going to happen. I mean, clearly there's talk about the Fed now, and there's like the CBDCs, or right, central bank, CBDCs, where at some point the government probably will bring in their central bank digital currency, and it'll sort of replace cash. You're already starting to see places that don't take cash, like dollars, like, which I think is illegal, but I mean, you would know better than me as a lawyer. But
well, cash has lost its.
I just mean, like, if you can't take cash, like at a place of business, that shouldn't be legal to,
But to show our age again, because you said you used to get ice cream for a quarter, which I did too, after school with my grandma. Like, you remember, you used to go to places and they'd say you take out an American Express and they'd look at you sideways, like, we don't touch those things. Now I take out $100 bill out of my pocket, and a millennial or whatever, behind the counter looks like, what do you want me to, like? She goes, like, you guys don't take cash, and she goes, this whole mall doesn't take, I mean, they have the whole area, like, I'm in a mall, like all 50 of these stores, we don't take cash. That's what we do. I was like, all right, if you guys like paying the service fee, here's the card, right? It's like, it's completely shifted or totally switched on its head. Yeah.
Well, I think the cash thing is a freedom thing, right? It's like, I have the freedom to go buy anything I want. No one knows what it is. And then the argument is like, well, if you're not doing anything illegal, then why do you need cash? And you're like, well, because I'm American. I want to buy whatever I want. And I want people to track it and whatever. So, I mean, I don't know. It's at the end of the day, whenever you do worry sometimes. Like, it's like, I've seen stuff where our power grid is vulnerable. How do you even say that?
Vulnerable.
Vulnerable. And like, you know what, like, we don't know, like, something could turn off. I mean, we know we have enemies, the Chinese and China, I shouldn't say the Chinese, China and Russia and all that, right? North Korea, like, they're kind of enemies at some point, like, and they don't want us to be the superpower. Right. Like, there's definitely some, obviously something going on there, but it's for a whole nother podcast.
Yeah.
Let's get back to your stuff.
Yes,
so
please
tell us about Sternberg Law Group. Like, what is it that you focus on? I know you said you had a few different things, but like,
so our main focus, if I had to elevator speech it, is really, we just try to keep people in their homes.
Yep.
Right. So a lot of people, for tons of different reasons, some you may think of and some are sort of novel, fall behind on their mortgage payment. Right. The most common is financial hardship. But
job
then there's
loss
also
or health.
Exactly. But there's also things like death and divorce, people getting into loans that they quite literally did not understand, right? Like, I had a client recently who refused to pay on a mortgage because the mortgage was paid off in his mind. And he hired us, and it took us a little bit of time because it was a private loan that he'd been paying on since, let's say he'd been paying on it for 12 or 14 years or something like that. It was an interest-only loan, right? Mm-hmm. So his calculation was, this loan has been paid off. So he stopped paying it, but he didn't understand that he hadn't paid even one penny to that loan balance, right? So then we got to get in there when they're in the 11th hour of losing their home, because the lender says, we're fed up with this. We've now spent X amount of thousands of dollars in our attorney fees trying to explain to you or defend you, coming after us saying this loan's been paid off. And then we try to get in there and really work things out, work things out.
Yeah.
Because the homeowner doesn't want to spend tens of thousands of dollars, right?
Right.
And the lenders have some flexibility, but aren't really looking for huge amounts of flexibility. But yeah, we help all different types of people who just don't want to lose their home. Yeah. And I'm happy to say we do a good job in the sense that most of the people who come through our doors end up, when we close out their files, end up keeping their homes. Every once in a while we have the sad story where it wasn't able to work. But there's usually such a history that the history is sort of too far gone for us to save, so we hope that we can at least explain that to the client in a way that they can understand it, they can process it, and if they do lose their home, lose it in a form of dignity.
Yeah, they sell it and they cash out or whatever.
Well, even every once in a while, maybe 1 or 2 homes a year we get do get foreclosed on. But like you were saying earlier, just having that knowledge of what does that mean, right? Because some people really think if you get foreclosed on Monday, that on Tuesday your key's not going to work.
Right.
But that's just not the way the law works. So sometimes you inform people on okay, this is a really bad day, right? This is going to be a black day for you and your family, but there is light at the end of the tunnel, and the first step is doing X or Y, and we'll help you do that. So we're counseling people. We're certainly a shoulder to cry on, but we've been at it for a long time. So, as you have, we've seen, sort of those ebbs and flows of the market.
Yep.
But the one thing that hasn't changed is that lenders will lend.
Yep.
People will take that money, and people will miss payments.
For sure.
Yeah.
I always think it's so odd when someone, has so much equity and we know they have all this cash and then they miss their first payment. I'm like, what happened? Like, how, what went wrong? Like, did they just decide that they're not going to make a payment? Like, do they not care? And I think, we might be going through a weird generational or culture thing that in America, where back in like the World War II days, they're like, we were, men of our word and we're going to make every debt. Like right? Like, and then
like your signature and your handshake
meant something.
Is all you had.
Without
that, you had nothing.
And now there's all this like wiggle room on things, and like criminals are getting let out of prison, or like for the weirdest things, and like people are stealing more now, like because it's like they have this limit of like $900. Have you heard about that?
Oh yeah, I live it. I'm in LA.
Yeah.
Oh,
so like there's this weird thing happening, and you can sense it, you can feel it. And I feel like maybe, like people, like you say millennials or whoever, just, they won't show up to work because they're just like, oh, but my dad was in town and he wanted him to go to lunch with me. And well, you didn't let your boss know that you weren't coming in. And they're like, but I didn't know.
Yeah.
Like, you know what I mean? Like there's this weird, and that doesn't happen to everyone, but it's starting to happen more and more.
See, my take on that is, it's sort of interesting because that generation of people working, right? So the younger people who are now in the workforce are looking at it and saying, just because you guys did it like that doesn't mean we have to do it like that. And just because you guys did it like it, that doesn't mean it's even right. Yeah. Right? Like you have to work from 9 to 5 in an office setting to be successful?
Sure.
Do you have to work 9 to 5 in an office setting for your superior, your boss, whatever you want to call it, to be happy with you?
With your outcome, or
maybe the answer is maybe not, or no. And if you're more of the European approach of you don't have
work done and then you go.
Yeah, if your dad's in town, then go hang out with your dad, but make sure that your clients know where you are, and make sure your vendors aren't trying to figure out, what I mean? There's a way to sort of manage, as opposed to, like, I'll tell you a funny story. I have a good friend who has a podcast too. I'll give him a shout out. His name is Benji Smith. His podcast.
What's up, Benji?
What's up, Benji? His podcast is called Law Flip.
Okay.
Super cool podcast.
Legal podcast.
Legal podcast. Nice. Yeah. And his dad, who I'm very close with, so I can kind of give him a little rub too, is he used to just pound us with, you have to work. He's an attorney also. You have to work. Like, to them, in their interviews, they would ask them, well, how late are you going to stay? Do you do weekends? right? And
Yeah,
like
you grind.
a decade ago or so, that was like a rite of passage.
Right.
If you can't hire, if you ask that question in an interview right now, it's
You
like
can't.
the
No.
people, oh, it was nice to meet you. I'm gonna go get sushi down the street and have a beer and go hang out for the rest of the day. Like I'm not looking to give you my weekends, you know? So I
Yeah.
think there has been some shift there where in the sense, with of course some exceptions, but if you're working 60, 70 hours, 80 hours a week, you might not be working that smart,
Yeah.
right?
Right.
You might not be doing it right just because you are doing it that way.
Just because you're sitting in front of a computer, and deleting, spam emails doesn't mean you're really working.
Right.
You're not being effective.
Exactly. You're not being efficient,
Efficient or effective.
right? What about building a team? What about collaborating with other people? What about bringing on another, if in the attorney world, or bringing on another counsel to assist you? Like 8 hours for how long? For the rest of your life?
Right.
So you wake up and you're like, where did those days go? So to your point, I think it's kind of interesting, and we were talking about COVID earlier, and I think COVID again just opened your eyes up to different ways of doing things, different opportunities. Because I used to be like that. I used to wake up every morning, put on a suit, and rush out the door.
Yep.
Then I would rush home, take off the suit, and do whatever I was doing. And then when I was home, I looked at my wife and go, where was I rushing to, and why was I dressed like that?
Yeah, who was like trying to impress?
80% of the time, I didn't even see anybody. 20%, sure, I had client meetings and things like that. But now I show up to client meetings in a polo or a V-neck, and I think you get the same thing done.
Yep. It's an interesting time we're shifting into, and part of me likes it, part of me doesn't like it. Like it's just you have to adapt, right? Like I think on the All In podcast they were talking about how someone in Italy was talking to. Do you remember that part where like the guy?
I'm not fully caught up, but
someone was from LA. And
I know
like,
Shamash got married in Italy recently, so I'm assuming that's who you're talking about.
And he was talking. One of the guys, maybe it was Sachs or one of them,
right,
was saying like they were at the wedding talking to this Italian person, and the Italian person was like, we're so different. Like you guys are go, very much. I'll totally botch what he said.
No, I'm with you.
The difference is like they'll work until they made enough money for the day, and then they'll go enjoy the day. They go fish, or they'll go spend time with their family, 4-hour dinner, drink wine, cigarettes, whatever. And then we're like, all about progress and making.
Yes.
So the difference is America. Yeah, we've had this amazing technology come out of America because we have this work ethic that wants to accomplish things and conquer things.
Yeah.
But like, the Italians just enjoy life.
That's it.
They just enjoy it.
So I listened to that clip on the way down here.
Okay.
So I know exactly what he said.
I totally ruined
you're pretty
it, but
close.
I get the gist.
He said, look, we're in the moment.
Yeah.
And you guys are looking for what's next.
Right.
That's essentially what it was, like I'm shrinking it down. But they show up to the wedding and they get a drink and they sit around and they talk. They don't know what time the wedding starts.
Right.
What's this? What American people show up, they look around. They go, "What time's the wedding start? When are we going to sit down?" And the time
to the next thing.
What do they care? Yeah. What do they care? Like we're at a wedding.
We're here. Let's
we're
enjoy
together.
It. Yeah.
This is the wedding, so let's just enjoy it together. But to your point, sure, the Italian economy is not comparable to the American economy. So I think that's where you have your sort of like the paradox of how do we enjoy ourselves but not lose that entrepreneurship that has made this country for its 250 years or so of existence become a financial powerhouse, which is also what they were talking about on the All In podcast. Are you willing to give up financial dominance as a country
to
change your culture? And I think the Italian people would say yes.
I love Mexico because I'm a tequila guy and I have a tequila business. But it's the same.
Business?
Yeah, tequila business. And it literally is very similar. Like they just will sit back. They don't go right into business. You have to go through this whole process of like, it's funny. I'll text, one of our contacts down there and I'll say, hola, Alejandro, ¿cómo estás? And then I'll go right into, in the same text, like I'll go right into like, when's the shipment coming? What's the next, I'll ask like 4 questions.
Yeah.
This is early on in my business.
Sure.
There like a year ago or even 6 months ago. And they'll send back a text message or a WhatsApp message, and they'll just say, "Hola, John." That's it. They won't answer any of the questions.
Yeah.
They'll just say hi because it's almost like, I think it's not insulting, but it's almost like they're like, "Oh, despacio."
Like we're just
chill.
saying hi, man.
Yeah, we got to say hi first.
I love that.
And so that I've been like, I struggle with it because I'm a very much a CEO. I charge forward.
Right.
I want to get things done and have timelines and deadlines and
our
and
culture
goals.
is now. Especially you send somebody a text message with a question, you better get it. It's direct answer back. I mean, that's crazy. But he's having a virtual tequila with you. You don't even know it.
Right.
You said hi. You sit down for 30 minutes with nothing going on, sipping on your drinks before you get into business.
So now I just sit and I ask about this family, I ask about the wife. You remember different things that, you met the son, and then you talk about that. And it's a night and day. And it feels better. Like it brings the cortisol down. Like brings down the stress. And it's just very like, hey, like, I know you, you know me, we're friends, we're doing business together. I don't know.
That'd be a cool, everybody does courses, right? Like you go on YouTube and it's figuring out how to encapsulate or capture that European, Mexican sort of spirit, but still have the
work
CEO
ethic
drive and stuff like that. It's a little bit
how do you
of,
mix that?
do you ever get into the Tim Ferriss, the 4-hour work week and stuff like that? There's a
Tim.
little bit of that in there.
It's being more efficient, right?
Yeah, it's like get your shit done.
Right.
But that's not all you have going on.
Right.
You know what I mean? That's like,
I love Tim Ferriss. I love his Tribe of Mentors book.
oh, I haven't read that one.
It's where he asks, I think it's, I don't know how many people, but somewhere in the range of like 20, 30 people, like who are like the, trying to think of a name. Who's the guy that did the Titanic and
the director.
Avatar. Yeah, the director.
Yeah.
Well, Cameron. So he asks him the same 10
Cameron.
questions. Same 10 questions.
That's cool.
That he asks like someone who's in the music business that crushed it, like
that's cool.
David Foster or something like that, or and then he asks all these people, but it's like the titans of industry.
Yeah.
And it's like, what's your favorite failure?
Sounds like a podcast, actually. Maybe it was before podcast.
I think he turned it into a podcast.
Did he? Yeah.
Yeah. So the book is all like, what's your favorite failure? What do you think your secret to success was? Name 3 things that you do that you think your competitors don't do, just stuff like that. And it goes into this, and it's very interesting how there is a lot of like, things that are connected, and
right.
A lot of people do similar stuff, but then just a bunch of cool ideas that's in that. But speaking of that, how do you scale and how do you have the ability with your business, and what's new with that, like that's been able to get you to scale and kind of like do less hours without having to grind too much?
And that is very important to me. Work-life balance is very important to me. I like to test my business by going on vacation, right? So I like to my family and I, it's my wife, and we have 3 little kids. We went to Hawaii at the end of the summer.
Cool.
And I essentially tell my staff, I'm in Hawaii. It's not the type of vacation where I want to take phone calls. We're not going to be back and forth. If there's a fire that you can't put out, not that needs to be put out, right?
Yeah.
You try to put it out first yourself. But if there's a fire that cannot be put out, don't send me a Slack message. Don't send me an email, because I'm not checking Slack and email until the end of the night or the morning.
Sure.
Call me. Go old school. Call me on my cell phone if there's really something wrong. And this last time I was in Hawaii, I didn't receive 1 phone call from my office, because a lot of it is really empowering people, right? With your personal knowledge. Yeah. So the first, I'm actually embarrassed to say it, but it is the truth. The first 8 or 9 years of my business, I was not doing that.
Yeah.
Okay. If you did like a chart, 90% of the business was just in between my ears. It was all me. Like every answer, every conclusion, every strategy was just all in my head.
Yep.
And I thought I was the man because I could regurgitate that.
Yep.
But you're really, to make fun of myself more, you're really not the man until your staff can do that, until you can explain how to do that, until you can teach people how to do that. And then to go one step higher, the next level is putting that into a written form, or these days we do more videos. Training.
Mm-hmm.
So we have catalogs now, which one day, if I do have the time, I want to turn into sort of like a handbook where my little corporate culture, I call it little because we're a small law firm, should function the same way these big conglomerates work. Like if you go get first thing that popped in my head is Carnival Cruise Line. Don't tell me why, but I see a Carnival cruise ship. If you go get a job on Carnival Cruise, they know what they're training you. There's a handbook that somebody has created, that somebody has read, that somebody has memorized, that will then be handed off to you.
Sure.
Your business should be the same thing, and that's for big and small tasks.
Right.
Until you're delegating and training and teaching people to do even the highest level stuff, doesn't mean they're always going to get it right. Doesn't mean it's still not going to come to you, but your team needs to be able to do that. I think that the people who fail in business are the ones that just keep everything inside, because that means the bigger you get, the more comes through you. So
you're a bottleneck.
You're your own bottleneck.
Right.
Exactly.
And
So that's
people,
something that I've kind of leaned into the last couple of years.
That's good. And people just, whether it's ego or it's your own your own need to feel needed, or self-worth. It's also kind of like, it's a weird example, but like how mothers, they feel so much worth in their kids needing them for whatever it is, and that's why they want to drive them, or they want to help them to make their food, and it's actually like such a testament and such a amazing area of pride that someone can have, is when your kids go off and they're successful, or they don't need you, because then you did a good job, right? You empowered them. Same with like me as a CEO. I mean, I remember being I was the bottleneck all day long. My door was in and out, in and out, in and out.
They sneeze, they come, hey, I'm going to wipe my nose now. Okay, great. Here's the tissue.
Right.
That's how my office was.
Yeah. And then you had to do that, but then you could never grow. And if you were gone, then like to your point of like going on vacation, that's the test. I look at it too as like, if I were to, God forbid, die, knock on wood,
right. Yeah.
that, would the business survive without me? You always wonder, like I don't always wonder, but I think it would. It's because like, I do feel like I have an amazing team. They do such a good job. I don't even, at this point, I used to be so intertwined with everything, with funding, with docs, with, rate locks and all these different things. I used to know it all and used to have my hands in it.
Right.
Now I just get emails, loan funded, and loan submitted, and it just works. It's like a machine, right? And I've always thought, like, one thing that actually stood out to me was I was listening to a podcast. I forget what it was called. I think it was Business Wars, and they were talking about it was Uber, and how he talked about the beginning. It was like a band of pirates, because like you can't. They all got to be kind of crazy to come work for you when you have just this crazy idea.
Yeah.
And if no one knows who you are, they don't know if you have the right funding. There's going to be just some random people that all come in and work with you, right? And then it slowly turns into a naval ship where you have command and control, and you have and so when that sort of shifts over from your band of pirates, where you're the pirate leader, right? You're Blackbeard,
right?
And you're just commanding everything, and you're in the middle fighting, and you're doing whatever with everybody. And then it kind of can shift to where you're just the commander. The commander doesn't go down and, check the engines in the naval ships. Like, he just stands up there and makes sure you're not, everyone's doing their job and drinks his coffee, right? Like, and that's when you've done a good job, I think, as a leader, as you've been able to empower people, like you said. And so what else are you doing to scale?
So we are doing...
outsource.
Outsourcing we're certainly doing. We're doing... we have found through... there's a company, I could tell you the company I use. There's a company called Upwork.
Okay.
Which it's actually a publicly traded company.
Heard of,
it's a big company. Yeah. I've only been on it for a couple years, but you can get talent on Upwork. It doesn't matter what type of talent. You can get domestic talent, so people in the United States. It connects employers to employees.
For outsourcing.
That's
cool.
What we have found is that there are a lot of tasks in our office that are repetitive. Mm-hmm. And we have outsourced those tasks to people working overseas that we hire through Upwork. Okay. The reason I like to hire them through Upwork is because Upwork just handles the payments, the HR, any complexity behind that is pushed off to that third party. Mm-hmm. And we have a team of people who are working either in the Philippines or in India, who are who are administrative superheroes. Okay. Wow. As far as I can see, I mean, I haven't had my feet on the ground in the Philippines, but the people in the Philippines, it's like they go to college. I don't even know if it's called college, but they're learning sort of their
like a trade or something.
Their training, you know, is to learn how to become a badass admin for a United States company, right?
Wow, yeah.
So if you were to hire someone here, you could see on their job history that maybe they worked for Charter Communications or Amazon e-commerce and stuff like that. And really, these people are running the back ends of a lot of these major companies. And when you onboard them onto a company like yours, going back to what I was saying about training and systems and stuff like that, they're looking for direction.
Yeah.
How do I do it? What do you want me to do? I'll watch 10 days of videos if you've got them, or read through sheets. And the communication is great. The deliverables are great. And for the most part, well, I would say the work product is great too, in the sense that you're going to have problems with your staff, whether they're inside your office or if they're overseas. So you certainly have your problems with overseas people, with attendance and things, you know, of that nature.
Sure.
But no different than you would have here.
Sure.
It's no secret that if you outsource it, it's cheaper.
Right.
But I've actually, before I got into this, I did my own research, and the rates that you're paying them over there, which I don't pay this low, but I have buddies who are paying sometimes $4 or $5 an hour. My average, I would say somewhere between like $8 to $10 an hour. But
which is still half or less.
But the cost of living there,
yeah,
you're supporting a family, and
Sure.
maybe even a family's family, in the sense that that person working full-time for you at $10 an hour is very happy.
It's way more than they'd make locally. Right?
Exactly.
Yeah.
And if you, like, you and I are both, you know, kind of, let's say, good people, right? We're not trying to work people or make them do anything that's soulless or anything like that. Sure. So you have a positive work environment,
right?
And they're very happy, and it's great because, well, again, we'll be honest here. A lot of people in the States don't want to do what they're doing, right? Yeah. Because here, it could be labeled as a dead-end job.
Yeah.
Right. This is how much I'm going to get paid for how long, and this is the task I'm going to keep doing.
Their heart's not into it because they're just it's not a,
and nothing against them.
Yeah, it's not
in
a
the States. It is
job.
Exactly. Yeah. It is a dead end job. But there again, because they've studied it, because that is in a sense I have. This is, I think, hysterical. I have a new woman who's working for us. Her name is Geraldine. Okay, she's in the Philippines. She's been with us for less than 2 months, and I check in with her. Geraldine, are you happy doing what you're doing? Do you see yourself doing this for a long time? And we're on Zoom, and she cracks up and she goes, "You're not going to believe this, but when I was a little girl, I used to dream of answering the phones for companies." You know what I'm saying? So she's passionate.
Cool. That's cool.
Right?
Yeah.
You can't say that here.
It is maybe
in the 80s you could have said that, like being a secretary meant something.
You dress up, you go to, talk to people about business, being in an office. It was like in the movies, people did it and stuff.
Yeah. No, there was some glam to that.
It's so rare today in this day and age to go to a restaurant and to see somebody really happy. Yeah. Smiling, beaming. I was at...
Unless you go to an Italian restaurant, though.
Yeah,
they keep going. Yeah.
Or a sushi restaurant, and they're pouring sake.
Yeah. Right.
But I was at this place down here near us called Gedanya. It's a little eatery, right? Okay. They have good, healthy burritos and food and stuff.
Right.
And this girl was just so happy with all the customers, right? And I was just like, that is something that you just don't see a lot. But to your point of, this person is super loving their job.
Yeah.
She was loving her job, and I was like, that is rare. I don't see that in America, a lot. And then, especially like to be able to pay someone half, and then they're also they're also stoked and passionate.
Did you chat with her when she was happy, or you just observed it?
I checked in on my table, and she was super bubbly and happy.
Yeah.
And telling everyone have a great day, and so glad. Thank you for coming. All those things. I'm like, this must either be the daughter of the owner or like I was like, or she just has a great fan. I'm like, I couldn't. Or she's on some great drugs. I don't know.
See, I always think you should hire her.
Yeah. I was like, her. I thought that. I thought that. I was like, maybe I should hire her.
Right.
Because she's like a hostess, right? Like,
right.
And she's probably in her early 20s, but like, be a great receptionist or a great, someone that's on customer service talking to brokers.
But and then in a couple of years, she could be knocking out loans.
Totally.
Who knows, right?
Oh, she could
if
crush
she's
it.
got that type of energy.
I might go try to hire her.
Yeah, I always think that.
That's cool.
If you're that happy here, imagine how happy you'd be working for me.
Making double, triple,
double, triple. And make your own hours. Just make it work.
So scaling, you're using some outsourcing.
Outsourcing, and we're doing automation now too. I don't know if you guys do any automations. We're doing
like AI automation.
No, I wouldn't call it AI yet. But lead gen. Let's say you're generating leads. Leads come in. We now can take that lead, throw it onto a Google sheet that's set up with an automation. Through another company called Zapier. I don't know if you guys know Zapier. And then all of a sudden they're getting emails and SMS. Those
drips and
those type of things, right? Which you saw the big companies doing that several years ago, but so it's sort of trickling down.
That's cool.
Phone calls. So I think that in the lawyer world, AI, they're talking mostly for intake right now, and also
research
and document review. Right. So I'll give you an example if you want to talk AI real quick. A guy I know in Texas is working. I can't think of the name of the company, but he's working in this AI world. That lawsuit, Dominion, was the Dominion Fox News lawsuit. You remember that one?
That was the voting machines.
The voting machines, right? So they settled it for, I think, a hair under $1 billion or something.
Fox had to pay Dominion.
Fox paid Dominion, yeah. 765 or 860, something in that world, a big number, right?
Like defamation,
and that's
saying
where,
that they were fraudulent or whatever.
Yeah, exactly. And that's where with the guy about Tucker Carlson, that was sort of the end of his Fox. Okay, so it's a big lawsuit. The amount of depositions, which are then turned into documents, right?
Sure.
So the amount of documents from the depositions in that law suit was like, tens of thousands of pages without exaggeration. And then you got to pay these lawyers for $500, sometimes $800 to then read through the depositions and figure out what's going to help, what's not going to help, what's important, what's not important, what do we keep looking into, that type of thing. So an AI tool that's coming out is just going to rip through these depositions
in seconds
and be like, and
here's the bullet points.
Right. So that 1,000 billable hours at $500 an hour, $500,000 or whatever it is that you would have paid, or is that 5 million, right? 5 million that you would have paid in attorney fees, which is, listen, if Dominion paid 765, I don't know if it was on contingency, but let's just say it was hourly, you're in many, many millions of dollars of attorney fees, just evaporates that section of your attorney fees.
Just that one section.
Yeah. So it doesn't replace the attorney, right? You still need the brains and the strategy and stuff like that.
But it cuts out some hours, right?
Hours.
From real humans.
Yeah.
That
are just reviewing documents.
They get paid a lot.
Right. And
so
God forbid there's two of them doing it at the same time, then you pay double. You know what I'm saying? And that's those type of big with those type of bucks on the line and big companies that can afford those type of billable hours, it's common. Sometimes you got 4 attorneys all billing at the same time.
Because one catches one and when someone catches something else.
Or it's a deposition of a main witness and you want your whole crew in there. You don't want just a one-on-one like this. So 4 attorneys sit and they each pop off their questions, or 4 attorneys strategize together. They all bill individually, right? So it could be at $500 an hour, it's $2,000 an hour.
Yep.
Right? So it could be
AI is going to do some stuff and I don't think people are ready for it.
Yeah. What about your industry?
Mortgages, I think, for sure it's already like the when I say the regular mortgages, I mean like the Fannie, the government loans, like they already have had this tool that they've used for years called DU, Desktop Underwriter, and DO, Desktop Originator. And it just like you put everything in and it just spits out conditions.
It just gives it to you.
I think it's just going to completely automate that whole process where at some point the Loan Depots of the world, the Quickens, the big guys will just not even need salespeople. It'll be like an AI pop up with questions to walk you through the loan process, and then just boom, 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 boom. You won't need a human to get a mortgage. Like pretty quick, almost to the point where you're going to be able to say like, Alexa, get me a mortgage. Okay. What, would you like me to unlock your financial locker to, Quicken? Yes, please. You have my authorization, PIN number 2, whatever,
Crazy.
And then it'll just take it and be like, your loan is approved.
Yes, I think you're right. I mean, that process itself, it had, like you said, it already been existed. But I think the difference is with the AI tools, they'll be able to read your documents, right?
Yeah.
So before you had the tool to upload a tax return, but there was no machine or robot or computer brain that could then analyze those tax returns. But if they start analyzing those returns, and what do you need an underwriter for? And if they start collecting them, then what do you need a processor for? Right?
Yeah.
Yeah.
It will disrupt 100%. And it's just a matter of time. And they keep saying it's exponential, like hockey stick. So with the technology improving, like to the point where, like, did you see that thing where it was a Tesla caller and the guy had like a South African accent and he just called somebody, hey, it looks like you, and I can't do the accent because I'll totally botch it. But,
try it.
It looks like you applied or you were looking at a Tesla, and he goes through this whole thing. And the guy's talking to him back and forth. And there's a slight delay, like you'd expect with AI, because it has to like process the thing real quick. And, it's on a phone call. So, you add that little delay. But I was like, everyone that I was on the call that listened to it, I think it was a video I watched, was just like fascinating that
So the voice was but AI.
The voice was an AI, and it was just doing a follow-up sales call.
Wow.
So just, it looks like you went into our shop. What did you like about the Tesla? What didn't you like? And he'd ask these questions, and it'd answer. The guy even came back saying like, yeah, I think everyone's looking at Teslas now. They're the hottest new thing. And the guy came back, yeah, it's very popular. And it was like and I was like, so if that's the worst it's going to be, then what's the next step? What's the next step? What's the best it's going to be?
That's entry level.
So salespeople, underwriters, process. it's all going to.
No. If you start to extrapolate,
it's a little
like airline pilots.
I already don't have to.
Right.
Yeah. I just went
car drivers. Just people who are in positions.
Truck
where
drivers.
Human error is still part of the puzzle.
Yeah.
I have a friend who's a dermatologist. Like, I don't know how many years I got left. I was like, what do you mean? He goes, well,
a robot.
I can see, how many faces can I see in my career or in a day, in a week, right? To know what's on the skin, let's say.
Yeah.
Because they could upload millions of images into these AI machines, and then they do a scan of your face, and it tells you exactly what it is. What do you need to pay me for anymore? Maybe I'll do the surgery.
Right.
I think is what he said. Right. So hands on. But
sure.
You can upload it. This is what you have or what you don't have, or you may want to do this, you may not want to do that. Yeah, it's crazy.
What are we going to do?
The future is now.
Hopefully it'll be when we've made enough money to where we don't have to worry. Yeah, but I don't know.
Or just grab
people
our
always
surfboards
get
and go
depressed
to Mexico.
Get some tequila and get out of Mexico.
yeah.
People get depressed, but there's always something, right? They've always been able to come up with something to do. And that's the thing. That's the $1 billion, $1 trillion probably question is, how do you work with that and navigate through that process? But yeah, it's coming for us for sure. Do you ever work with mortgage brokers, or I'm sure you work with real estate agents?
We do. Yeah. So especially in this market, we have homeowners that are in crisis, but they have tons of equity.
Yep.
So we're always looking for mortgage brokers who have the ability to lend on sort of unorthodox lending, right?
More private lenders, or
it can be private is great. For me, it's more just somebody who has a little bit of flexibility, right? So if it's your credit score has to be this, or it's a no, or is it, hey, if your credit score is a little bit low, let's figure out what that is. Do you have some assets or a story or something coming up?
Like make sense lending.
Make sense lending. That's a nice way of saying it. Yeah. We just need people who make sense. And we have done a ton of loans through mortgage brokers in the last few years because equity positions were strong. Earlier in my career, when there was no equity, there was no lending.
No lending, yeah. So someone might come to you with like one or two missed payments, right? And then we can do, I think, loans for people if they've had 30 or 60 day lates, and that's pretty common it can't be like currently delinquent. So, but if they had a 30-day in the past, 12 months or up to 60 days in the past, we can still do something if they have a low LTV. Credit score's not totally screwed.
So there's some lending in bankruptcy. I don't know if you've had much experience there, but when you're in a Chapter 13 bankruptcy, which I mentioned earlier,
yep.
It's a 60-month bankruptcy, so 5 years. and you're required to make mortgage payments during that time. So a lot of times people will file bankruptcy, and then their mortgage history is great because they've made 12 payments or 14 payments or even 20, 30 payments sometimes.
Sure.
And lenders will come in. So my clients will contact me and say, hey, we're going to refinance. Okay, that's fantastic. So there are lenders out there who will refi somebody in bankruptcy because they've shown that they've been able to, even if they still have some default, it's being paid off to you know what they do? The loan will pay off the bankruptcy at the same time, right? So,
cash out, we'll pay it out so they can end it. Yeah.
So the refi is the mortgage balance plus whatever's left in the bankruptcy. So that's how they'll end the bankruptcy.
Yep.
Yeah. So that's a really good way.
What about tips for brokers who are looking to partner with attorneys? Like where would you see, and especially with bankruptcy attorneys, right? Someone or maybe divorce attorneys, that would be a good one. But like with what you do, is there a way for like a broker to, kind of partner with you?
Yeah. So what I would say, and this is a little bit against my philosophy, but I'll say it anyway, is we're always looking for people who are good at certain things, right? Mm-hmm. So you might have one lender who's great at reverse mortgages. You might have another lender who's a rock star at conventional. You have another mortgage broker who's great at hard money loans or bridge loans or short-term loans or commercial loans, all different types of loans. Yeah. So if you we love building that out, and we'll refer those out to people.
That's cool.
The reason I was saying that's against me because it's a little bit sort of mom and pa approach, but I think the first place is to make that contact and then figure out how to create that system and see if that's scalable. And if you're a mortgage broker and you're doing the same thing with bankruptcies attorneys throughout California, then you can build out that as a source.
That's good. That's good.
That's what I would recommend. And same thing for divorce attorneys, CPAs, things like that.
What about self-employed borrowers? Do you get much of that?
We do. The biggest thing I see with self-employed borrowers is they need to be educated on how much money they make. Yeah. I find that a
lot of them don't even know. Like, I don't know what I make.
So confused about how much money they make, right? Yeah. Oftentimes, they shoot themselves in the foot, right? They make good money,
right?
But they claim no money because they don't want to pay taxes on it.
Sure.
So when you get down, if you're going full doc or something to that extent, the tax returns might say that they make $28,000 a year. And I look at them and go, your mortgage is $5,000 a month.
How do
you're current on your mortgage.
Yeah.
That's 60 right there. How do you mean you make 28,000?
Pay it through the business.
Yeah. So, and we have that challenge in bankruptcy because in bankruptcy, it's a lot of how much you make, how much you spend, right? It's an income and expense analysis. And they don't know how much money they make. Yeah. So
I would say we're in a recession, even though they haven't officially called it or whatever. You can feel it. You just kind of know, right? We see a lot of people looking for cash out on loans. That's pretty much all we're doing. Some purchases, but a lot of cash out first, a lot of cash out seconds. People are looking for cash. They're cash strapped. And that tells me business is down. There's a recession. There's a pullback.
That's the restriction. Yeah.
What are you seeing, and where do you think it's going to go in the next year? What are you seeing right now? Do you think we're in a recession? Do you think are you getting more kind of calls about bankruptcy? What does it look like if I file bankruptcy? What are you seeing right now in the economy?
Yeah. So for us, we're always trying to get people out of a problem while rates remain high, to get them into a new loan or to modify their loan even sometimes into a higher rate doesn't make sense. Right. So people are still in that just holding on tight sort of mode. I think we got to wait and see when some of these loans start to reset.
Yep.
Right. To see how the lenders are going to deal with that.
But are you starting to see a little uptick, or is it not really upticking at all?
No, there's been a little uptick.
Yeah.
Yeah, there's been a little uptick. I think foreclosures are certainly up because once the COVID forbearance is finalized, lenders have got a little bit more aggressive. But I don't know how interested lenders are in owning homes. So sort of like they were before, they're holding off on how aggressive they're going to be, which is a good opportunity for people like me and people like yourselves or some of your listeners who are mortgage brokers, because maybe all they need is a new loan, right? Or they need that cash out second to weather the storm, and then move on from there. Yeah, but overall, I'm hoping that we've gone through the worst of it. I don't know if I'm right, but that'd be a beautiful thing if the Fed going crazy with these rates got us to a point where we can start lowering off the rates again. I mean, unemployment is very low. Mm-hmm. And there's still a lot of money on the streets, right? In the sense that on the sidelines.
Think about that. You're saying unemployment's low, it's low, right? And that's even with people like you outsourcing jobs. I know. So, I think we're probably going to be all right. You think like, okay, you're outsourcing jobs. Jobs are going to kind of go away. So at some over time, with AI and stuff, but at some point it'll adjust and people go back to work. They won't want to do some of these jobs, but they realize, okay, I have to do some of these jobs. Right. So I don't know. What about you? Do you think, the election year's coming? Do you think, you said that you think hopefully they'll, we've seen the worst of it. Maybe, they'll lower the rates. Like, do you think election years are always kind of funky in the market?
I mean, my experience with election years has always been they're kind of disappointing in the sense, you hear people leading up to it, you hear it's an election year, and then it kind of happens and
nothing really happens.
Nothing really happens, but maybe it's just the anticipation of that going on. I would love to see the Fed start lowering rates.
Yeah.
And really,
I think we all do.
Yeah. Right? And just like revving the economy back up, where people who, like yourself, who've invested in your business, who are hardworking, can kind of see the fruits of that and not have to worry about what's next. But I think the American economy is a very vibrant thing. I think what we lived through in 2008 is way worse than anything we may or may see in our entire lifetime. I think like 2008, right, was just because of how systemic it was
terrible lending practices.
That was like 1929, depression. Was more similar to than what's going on right now.
It got so tight, like it swung from, you can fog a mirror to all the way to like, if you have $1 million in the bank, we're still not going to lend you $500,000.
Crazy.
Unless you have a job that has, it was like,
I see revenue. Yeah.
So
income.
It loosened, right? Like it started loosening, I think in 2018, there's some different products started loosening a little bit. I thought it was going to loosen more, but then COVID hit. It was starting to just start to loosen more, like guidelines wise, expand. And it was I saw that trend happening. Then COVID hit, and then they shut off all the loosening, tightened it. And now it's like back to kind of where it was, right, 2020 when it started to loosen more.
That's good to hear.
It's still, though, like, there's still a lot of and there's not a lot of loans out there. There's not a lot of real estate to buy. There's not a lot of, inventory's low. Loans are just, no one wants to get rid of that low rate first.
Meaning people are not originating.
There's not a lot of originations, right? The applications are way down.
Right.
But I think it's because everyone doesn't want to give up that first.
Yeah.
Right. But then some people need to tap into their equity because they have a ton of equity.
Right.
So it's like, okay, what's going to start to kind of loosen up that people wanting to borrow again. And, the seconds, I think what my predictions, the seconds are going to go on. And then when rates come down, they'll consolidate into a new first. So people listening should do seconds. I mean, that for their customers, so they can keep their customers happy. Otherwise, someone else is going to do a second for them. Right. I think credit card usage is way up, right? Statistically.
Yep.
So, that is recipe usually for bankruptcy, right? If they max out all their cards.
Credit cards.
Can someone bankrupt just their credit cards and keep their low rate mortgage?
Yeah.
So, I mean, I think that's going to start happening at some point. Even if they have equity, they can just like go into 13, right? They go
into 13. Yeah. California changed their homestead exemption, which used to only be 100. Well, so if you file bankruptcy, you can have a certain amount of equity in your principal residence before it has a negative effect on your bankruptcy. Doesn't mean you can't file, but then things start getting a little tricky. It used to only be 100,000, but in I think 2020, Newsom changed it to 600,000.
Wow.
So if you
have 600,000 in equity, you can still
the bank. If you have 600,000 equity on your principal residence, the bankruptcy court essentially looks at that $600,000 like zero.
Is protected.
Protected, yeah. So no issues. You go up to 700. Now you got to figure out what to do with that $100,000 in unexempt equity.
Interesting.
But yeah, you can have credit card debt and $600,000 in equity in your home, and wipe out all the credit card debt down to zero.
So in a 7, that would be a 7, right?
That would be a 7, yeah.
And still keep your equity in your home.
Still keep your equity in your home.
Wow, I did not know
and
that.
there's ways. 13 would also give you that benefit, but it takes longer to get there. Yeah,
you still have to, you'd reduce, like you'd settle with the credit card companies, and then over time you'd pay down.
You could pay a percentage. Yeah, a lot of that then falls back on how much money you make.
Yeah. Interesting.
Yeah,
it'd be interesting to see the statistics of, bankruptcies if they're starting to slowly.
Yeah, I have access.
Up.
I'll send them to you. I'll email it over to you.
Yeah, I would suspect that we're still early because of so much people have so much equity, people have so much room on their credit cards, but I think those are starting to max, and then
the rates are tightened.
Yeah.
Yeah.
All right. Well, this has been great. So any shout outs, any kind of last people that have helped you along the way?
Yes. Oh, shout out. So my family, first and foremost, my wife, Sarah, beautiful wife, my 3 wonderful children, Caspian, Shiraz, and Rumi. That's my personal shout out. And then my business shout out is my mentor. His name is Sam Malai.
Cool.
When I joined his group, he was called Legal Funnel. Since then, he's changed it to, he's going to get mad at me. He has a new name.
Awesome.
But you can find him, Sam Malai, Legal Funnel, online. And he has sort of taken the Tim Ferriss approach to the legal field.
Oh, nice.
Yeah. Stop doing what you don't have to do. Learn how to delegate. Learn how to automate. Learn how to scale. And he's a lawyer who's not practicing law, who is sort of a beacon for a lot of us lawyers trying to figure it out.
That's
because sometimes lawyers lack the business acumen that real business people have. So it's been a lot of fun. Yeah. So
that's cool.
Those are my big shout outs. And also to you guys, thank you so much for having me down.
Oh, this has been awesome, man. I think this is the longest podcast you've had in a minute. It's been a while, but we got into some cool conversation. Where does someone find you online?
Yes, so
reach out to you.
I love that. Yeah, the company name is Sternberg Law Group. My name is Joshua Sternberg.
Cool.
Just go on YouTube
Cool.
if you want to learn more about our company. We've got the YouTube channel going, and if you need to hit us up, you can find us through YouTube or through our website, sternberglawgroup.com.
Definitely, if you have any borrowers that are struggling, foreclosure, bankruptcy, you can shoot them over to Josh. I've known him forever, and you do good work. So. That's awesome. Thanks for watching, everybody. Please like, share, subscribe, tell your friends about this podcast. That's how we grow. Let us know if there's any guests you'd think we should interview, and I'd be happy to do that. And thanks again for watching. See you on the next one.
The $1 Million Mortgage Experience Podcast.
That was great. What a fun thing, you guys.
We could have gone down many rabbit holes.
So many. I know. I feel like I got to come back. I appreciate it.